Thank you, Amy. Thank you very much for the opportunity to present at the Noosa Mining Conference. I'm just making sure if, yeah, no, that's good. I just got the thumbs up, so sorry about that. So Strandline Resources, mineral sands focused company, and with a portfolio of assets in the two largest producing jurisdictions of the world in terms of mineral sands, both Australia and Africa. COBURN project, our flagship project, is poised for development. And that's the project that really I want to feature in this presentation over the next 10, 15 minutes. But before I do so, we'll just do a bit of a snapshot of our Tanzanian assets. So we do have a series down the Tanzanian coastline, and that corridor of sand from Kenya, Mozambique, South Africa, Madagascar is a really rich corridor of mineral sands production at the moment, a major producer of supply to the global market. And we're strategically located right in the middle. Our two most advanced projects, the Fungoni project, our starter project, which is a very high margin project, and our Tajiri project have had recent feasibility studies delivered. So the metrics have been presented to the market. We've been navigating our way through the mining reform over there in Tanzania. And one of the key catalysts for us to start to unlock the value there is really locking down our framework agreement with the Tanzanian government, which is what we're focusing on. And we announced a few weeks ago some really positive progress in that regard. But let's just move through some of the corporate aspects of the project. Our current market cap sits at around just over 100 million Australian dollars. And the feasibility studies we've done with COBURN to the left on the figure, quite a significant NPV of 705 million Australian dollars pre-tax NPV. And there's an extension case along strike of to the north of that deposit, which adds another 15 to 17 years of production targets to give us an NPV of 825 million Australian dollars, which has been recently released mid this year to the market. The Fungoni project, as I said, a small scale, rich project, modular relocatable infrastructure, another 70 million roughly Australian dollars. And then you've got the Tajiri project, which we announced our first engineering study in early October this year, which is a significant step change, a bit above Fungoni. So there's a massive valuation gap between our market cap and our current net present value of our three most advanced mineral sands projects. So our job is right now to start to unlock that value. So you can see the deep value within our portfolio. Corporate snapshot. ASX listed, STA is the ticker, 20 million cash in bank. As I mentioned, just over 100 million market cap. Our major shareholder, Tembo Capital, has been hugely supportive with the company over the last 4 years of exploration and development. They're at 31%, and also very strong supporter of us making a final investment decision shortly on the COBURN project. In recent times, we've added some institutional strength. The top 20 shareholders own 64%. We're very well covered in terms of expert analysts who follow the mineral sands space. We've got Andrew Hines, Shaw and Partners in Melbourne, Chris Brown, Morgans in Brisbane. We've got Matt at Foster Stockbroking and Trent Barnett at Euroz. And all of those analysts have been following this story for the last few years, and significant short-term price targets over and above where we sit today at 20 cents a share. The board is well led by Didier Messia, and we've recently added Mark Hancock to the board as a non-exec director. Mark brings some significant chartered accounting and finance background, CFO roles previously, also company secretary roles previously. And that's really strengthening and supporting Flavio Garofalo, our CFO and company secretary, and his team in preparing us financially and from an accounting perspective for the development decision we've got. The rest of the team are really biased to development and operators. That's my background, being an engineer and being involved in projects for the last 25, 26 years, major projects in coal and iron ore and gold and so forth. And I've been able to really assemble a strong development team in readiness for this construction phase. Peter Watson is an executive director and over 30 years experience in major projects around the world and running businesses, sizable businesses, to really help us prepare well for the transformational change we're going to do now. A little bit on the market for those, just to give everyone a refresh. It's a bit of an opaque market, but it's very mature mineral sands. It's been around for many years. The big players, as we know, are Iluka, Rio Tinto and Tronox, where they're global businesses, and they dominate production. About 70% of global production comes, I believe, out of those three big producers. The main product streams are zircon, titanium, and emerging trend in the sector of the monazite rare earth mineral, which goes into rare earth extraction and permanent magnets for electric vehicles, et cetera, et cetera. So industrial minerals, and as you can see, most industrial minerals have a lot of applications. The big application in zircon is ceramics, there's foundry, casting, and those type of applications, some niche applications in electronics, in your printed circuit boards. Titanium products as well is really a strong part of a mineral sands project, and paint pigment represents about 90% of the end use for titanium. That also goes into titanium metal in the aerospace sector, as well as in the construction industry for the flux of welding rods. So quite a diverse range, and it largely goes with global, in terms of demand, is largely linked with global GDP through urbanisation, rising living standards across the world, and that broadening array of applications that I mentioned. So 2 to 3% year on year is the underlying trend of demand. And what we're seeing in the sector right now is quite a rapid decline of existing supply through declining grades, mine closures, depleting stockpiles and the like, which is creating this inducement of new projects. And there's just not many quality large projects around the world like COBURN and what we have in Tanzania. So that means Strandline is really, really well positioned right now to feed into and get pulled forward by the end consumers into this structural deficit that's emerging in the sector. So that's the reality, and really exciting for myself, who's leading this business into this type of market. Very difficult for a junior mining company to push projects into the market. So when you're getting induced and you're getting pulled forward by the end consumers, that's exactly the dynamic we need. So what I'll do now is move straight into COBURN, and that's what I want to feature today. It is one of the largest, most advanced, undeveloped mineral sands projects in the world. It's got an exceptionally rich mineral suite and assemblage, low operating costs because of its scale, and where it is in the world, and strong financial returns. So we issued a definitive feasibility study mid this year. And since that time that we've been going through financing, off-taking, and also going through preparing and awarding a lot of the major execution contracts to be in this position for a near-term FID, final investment decision. It is a major project. It will produce about 5% of the global zircon market. It will produce about 10% of the global chloride ilmenite market, and about 3 to 4% of the global rutile market, which puts it as a substantial project in the big scheme of things. It's quite capital efficient. So the project benefits from being very close to port infrastructure of Geraldton Port, and also the Northwest Coastal Highway, which is gazetted for bulk road train configurations. So we leverage off that infrastructure, as well as Geraldton, the region in the Midwest there in WA is quite an industrial hub, and it's had very familiar with the mineral sands operations in and around that region. So Iluka, for instance, have been there over 30 years in that region with a large mineral separation plant, and they've been exporting their products out of the same berth that we'll be using in our operations phase. What we've done as a big catalyst for our financing, and it's really an enabler for this development, is mid this year we secured the $150 million debt facility from the Northern Australian Infrastructure Facility, which is a Commonwealth initiative that identifies projects such as Strandline's COBURN project, which are strategic in scale, in critical minerals, have strong Indigenous engagement strategies, strong local content. In mineral sands, we benefit from a lot of the technology we use is actually manufactured in Australia, such as the spirals and some of the dryers and et cetera, in our flow sheets. So, and that's because Australia have been a dominant producer of mineral sands for many decades now. And therefore the the manufacturers have been able to supply locally a lot into that sector, which is great. So I will tell you, as you can see on the figure on the right, you've got the NAIF facility. All our assets are held in a special purpose vehicle for development, which is quite common in Coburn Resources Pty Limited. Strandline 100% owns that project, so very clean ownership structure. We're expecting to secure a commercial debt tranche that will sit alongside NAIF. And we've announced it'll be up to around 100 million Australian dollars. So with the NAIF facility and the expected commercial debt tranche, is going to be really quite a strong credit structure. It'll be about between 60 to 70% geared, which therefore, and the rest of the funding will be through either a hybrid mezzanine type structure and or the equity proceeds. We already raised early this year 18.5 million. That was in August, and that was really well supported by sophisticated investors. So that's a really good start to that equity shortfall that we've got once we execute the commercial debt tranche. So one of the key things in industrial minerals is the quality of your counterparties that you're selling it to. And pleasingly, we've announced 4 major offtake agreements to some of the largest global consumers in the world. We've got 100% of our chloride ilmenite going to the Chemours company in America, and that's under a fixed price arrangement, which gives us an effective hedge in our revenue stream. So extra certainty on the price that you get, which is quite rare in an industrial minerals project. You've got the zircon concentrate, which also benefits from that rare earth mineral monazite, and some titanium credits, is going into China to a Shanghai listed stock exchange called Sanxian in partnership with Nanjing. We've also got our premium zircon, so our ceramic grade, which is fantastic, going into Europe. And Europe is one of the major consumers. And we've got our offtake with Industry Batossi and also Chilchers Materials, who are owned by the large Torresud Group. So into the Europe. So we've got that diversity geographically of where we're selling our product, which is a little bit of a differentiator for us. Every one of our products are a premium quality and our low impurity. So that allows us to really maximize and get that premium price across our suite. The rutile offtake is yet to be awarded, but as you might have saw in a few slides earlier, that rutile dynamic of supply coming off really rapidly through 21, 22 is the exciting phase of that structural deficit for rutile, which hopefully we'll benefit from in placing that last rutile offtake. Just quickly on the technical side of things, before we move into wrapping this up, it's a very conventional. If you look at mining, it's large dozer push sand into a dozer trap. We draw water from a large aquifer, the Carnarvon aquifer that runs under our ore body. We draw that, we put the ore into a slurry. We then pump it to the wet concentration plant. And because of our grain size being really coarse and low slime, in upgrade to a 95% concentrate, one of the richest basket prices of mineral sand concentrates in the world because of our bias to zircon and rutile and because of our long life, over 22 years of reserves, plus that extra 15 to 17 years, it always justifies to do a mineral separation plant and value add in country and take it to those final products, which opens up all those counterparties across America, China and Europe, which I mentioned previously. There's some big numbers in this project. Annual EBITDA of 100 million. So 1 times EBITDA of this project is our current market cap. So there's a metric for people who want to see if they can identify value in a project. At 1 times EBITDA, Strandline's market cap right now, there's a fair bit of upside to go. So this year's been huge. We've gone through and we've ticked a lot of boxes. Offtake, DFS, we've gone through placing pretty much all of our major execution contracts with major contractors. We've now got the commercial debt tranche that we've got to tick and get alongside that NAIF tranche, which is very mature and substantially progressed. And then there's a final investment decision, which is massive for the company. In summary, Coburn is able to differentiate. It's a strategic asset. It's in a great time of the market in mineral sands. There's a lack of good quality projects around the world, not like there was 10 years ago. It's a rich assemblage, exceptionally low slime. So everything we're doing is conventional. So there's nothing novel in how we're going about it. We are using state-of-the-art technology. So the project is construction ready. It's great customers and a lot of jobs here in WA when we really need it. So I really appreciate the opportunity to present to this forum. So thank you very much, Amy.